Okay, the industry, brokers and exchange industry. Even though we have this industry is one industry, in reality, when you start analyzing companies included in it, you will see that they can be affected in different way, but current crisis is one thing. And secondly, different factors that will affect their performance. Last year, we analyzed E-Trade, ETFC, and I believe that ETFC moved quite a lot after our masterclass. At the moment it is high, so it's not time to buy that particular company, so we have to wait till it rebounds back, but current company is quite good. Now current company is more like exchange rather than a broker, and that's why they're making money in different way. But if we look at general at this industry, so first of all, this industry definitely benefits from current market volatility. The more volatile the market, the higher the spread, the more money they make. And if brokers, they have brokers fee, which they make, where market makers and and majority of exchanges, they are market makers. So they are making money on a difference between buy and sell. So they are making this difference, which is spread between bid and ask prices. So their profit compared to brokers is higher because broker might take 1 cent, right, per trade, where exchange might take 5, 10, and sometimes even more, right, because it's spread always bigger than broker's commission. Second thing, if we take the same industry from say 2000 and we compare it with now, so we will see that it's a lot of automation there. And because of automation, the cost of running this business is reduced quite a lot. And even the fees, which now they charge fees for their different services, are smaller than it was like 10, 20 years ago. Still, they're making more money because their margin is quite high. The cost of running that business becomes cheaper and cheaper for them. Now, also, another thing which is very important, a higher level of legal regulation, government control, helps big companies to squeeze small competitors. It's quite simple. In order to open even advisory firm, you would have to spend up to $300,000 in order to get a license, in order to hire proper people, etc., etc., audit yourself. So sometimes it takes like $250,000. Not so many people can afford to do that, and then there is no guarantee that you get this license and you get the right to trade. Okay, so that's why it becomes more difficult compared to like 20 years ago, where you can open, register a company, call yourself as advisor or broker, and start operating. Okay, with very, very little investment. At the moment, it's more difficult to do that. Okay, and in addition to this situation, majority of companies, they have, if they go to the different market, they have to get registration there as well. So for example, if you a broker and you want to operate with Australian customers and you want to open Australian office, you have to file and get a license in Australia itself. Otherwise, it could be some difficulties to open the local office. Yes, you always can deal directly with customers without going and representing yourself, your company in the country, but a lot of people, they don't like that. They prefer when they have an office, a legal entity within their own country, because they are not feeling confident to send money somewhere to some kind of broker in different countries. So they prefer that somebody is local. So for example, if we compare to brokers, Interactive Broker, which majority of our investors use, and another one is Charles Schwab's. Charles Schwab's, they used to have an office in Australia, they have a representation. They didn't have a branch in Australia. They had a representation. And Interactive Broker also had representation. But then it seems like Australia had some changes in legislation. So Interactive Broker, they applied, they got the license, and now they have a like complete branch here in Australia, and whoever opening the account now, they deal with this local branch. Whereas Charles Schwab's, they decided not to do that. So, and at the moment they lost Australian market, so they had to close the local office, and they don't provide any support. So for example, if for me I require kind of support from Charles Schwab's, I would have to call to United States in order to get that. Okay, it is important, and the main reason for that, because Interactive Broker, they target different type of clients. They target clients who trade US market, but also target clients who trade Australian market, because they can provide both situation. Also, they have a lot of capabilities to trade Asian markets, and as a result, all Asian guys who live in Australia, they get a chance to open the trading account and start trading Asian markets. Okay, so that's why Interactive Broker, it was financially wise for them to open the branch here, whereas for Charles Schwab's, which could offer only US entities, they couldn't provide all those services, and for them it wasn't viable, like from the business point of view, to open account. That's how big companies, they squeeze smaller companies from the areas, and of course they start making money. So you have to consider this when you're analyzing this particular industry. Now, as I said, high level of competition among leading brokers, and the competition is already not only based on the fees. Some brokers, they completely waived their fees. For example, Charles Schwab's, they waived fees, but only for US citizens, right? So if you're Australian citizen and you trade through Charles Schwab's, you still have to pay those fees. And reason for that, because they're making money. If you look at Charles Schwab's business, their major income not from brokerage, right? They have different advisory services, investment services, and that's where they make a majority of their money, not from the brokerage commission. Whereas if we look at Interactive Broker, their major income is fees from the transaction, so which we pay commissions, but also about 50% they make from providing margin facilities. So different brokers, they have different business model, and when you're analyzing it and when you compare two brokers to each other, you have to take into consideration their business structure as well. Okay, and as I already told, adding extra services increase customer satisfaction and their loyalty. So for example, I really love Interactive Broker because within one click I can see fundamental analysis, I can see technical analysis, I can see option prices, I can do screening process, I can do different graphing, etc. So it's very, very convenient, and also I can control my account through smartphone, through online platform, so it doesn't really matter. So it's very, very convenient way to deal with Interactive Broker, whereas other brokers which I used, they're not as good, right? So I also had to have a program for technical analysis where I could analyze. Also, I had to have subscriptions to financial data, etc., etc. So it was like that situation. Okay, this is about general industry. So the way I've done, so I went to Value Line. The reason why I analyzed, first of all, this particular industry, because I went to Value Line. By the way, for guys who don't know what the Value Line is the company which started its operation in 1923. So it's nearly 97, not nearly, 97 years ago. It started its operation during the Great Depression, where there were a lot of Ponzi schemes in the United States, and the main reason for starting that company was to provide unbiased factual information to the investors about specific companies. So this company still exists. At the moment is managed by the granddaughter of the founder of that particular company. You actually can buy stock of Value Line on a stock exchange. It's also public traded company. And the reason why I started using it, because when I was reading a book like about Warren Buffett, how he invests and how he analyzes company, he mentioned that in that book was mentioned that he is using Value Line. So I thought, okay, great. If Warren Buffett, the richest man at that time in the world, using Value Line as a research source, I decided to do exactly the same. Okay, value line has a certain area where you can go and you can see the list of all industries. And as you can see that industry rank, they have 100 ranks basically because 100 companies, and usually the lower the rank, the better the industry in the sense of potential growth within the next 12 months. So for example, if we look at brokers in exchanges, it has number 2. It means that this company has, not company, industry has the highest price potential growth in 2020 for the next 12 months. Okay, the last issue date was July 2010, like 10th of July, so it's only 20 days ago, this changes, so it's quite new. So that's why I chose out of all these companies, I chose out of all these industries, I chose brokerage, and at the moment we're going to look at them. Okay, so if you click inside, you will see 15 companies, and some of them are well known, like NASDAQ, Charles Schwab, TD Ameritrade, Market Assets Holding, Intercontinental Exchange, Interactive Brokers, E-Trade, which we looked before, right? So some companies are well known. So what I've done, I took all the stickers and I put them in FinViz. FinViz, it's another analytical platform. And the reason why I put here, because it's easier to see in one place whatever happens financially with this company. So as you can see, the name for industries differ in different analytical platforms. In value line, all these companies were included in brokerage and exchange industry, but if we go to FinViz, they have different names, right? So for example, Ameritrade and BGC partners, they would be capital markets, right? Whereas CBOE as CME, they would be in financial data and stock exchanges. And I presume it's more precise dividing it like that. If you look at FinViz, they have much more industries listed than value line. Okay, so that's why quite often I go to FinViz after that and see real competitors to the specific companies which analyze. And we can see that E-Trade, it's capital markets as well. So if we were choosing companies based on FinViz, we probably won't put them CBOE and ETFC in the same basket, right? But because we are taking like value line as a source, they were in the same type of industry. Right, so then if you go to that's overview, that's what we can see in overview, and that's valuation. So when I looked at valuation, we can see a lot of different parameters. I'm not going to go into details, I just show a few of them. What I've done, I put them as a PE ratio, so from the lowest to high. So we can see that Ameritrade was the lowest, then LPLA 11, then Charles Schwab's 13, ETFC 15, and CBOE was 20. So it's not the lowest PE if we compare to different companies. So we need to understand the major reason why I decided not to do for Ameritrade, why I didn't analyze Charles Schwab's. Actually, initially I was thinking to analyze and present Charles Schwab's and Ameritrade, but when I looked in more details, like within those companies, I kind of found the reason why they price so low, and that specific reason is not kind of the reason which you precisely can tell, oh, it's going to be all good. No, it's not. So that's why I chose the company which has most kind of stable business structure and less surprises for us in the future. Okay, this is that's the reason why I chose CBOE. And also, if we can see that both of these companies, current PE is 10, forward PE is 16. So it means that next year earnings, they expect to go down quite a lot, right? So here and here, nearly 60% drop in their earnings. Whereas if we look at CBOE, actually the earnings going to go about 10% up because the forward PE is lower, right? So compared to the current earnings, the forward PE is lower, right? And the rest of companies are higher. For example, if we look at another exchange, NASDAQ, PE ratio is 30, so it means that it's 50% more expensive than CBOE, right? And ICE, it's another stock exchange at 25, so it's 25% high in price. All right, so that's how I chose it. Also, what I've done, I look at the technical analysis. FinViz also allows you to quickly look at these companies. And as you can see again, Ameritrade, Charles Schwab's, and CME, they kind of at a good technical analysis level. I am not taking into consideration this big drop which happened. It happened with all companies, but then I can see, for example, CBOE is kind of slowed down on this level, even still downtrend, but it's kind of slowed down on the level of $90. And the same story with CME, Ameritrade, and Charles Schwab's. Okay, that's why I chose CBOE. Here, all the companies which included here, they earnings per share growth for the last 5 years was more than 10%. Okay, all of them optionable and all of them pay dividends. So kind of in this particular case. All right, guys, before I proceed, can you tell me, please, if it is all clear about the industry as general? So can you please put from 0 to 10?